You are listening to Invest in the Future by Future Africa. Future Africa is a platform for mission driven innovators and investors who are turning Africa's biggest challenges into global business opportunities. Please note that the content of this podcast is not to be regarded as investment advice. You are listening to a live recording between Sahil and Iyin E Aboyeji at Invest in the Future, a live webinar. Please learn more about Future Africa at www.future.africa. Everyone, once again, you're welcome to Invest in the Future. This is the first episode in the series of live fireside chats. Just a bit of background again on Future Africa. Future Africa is a platform for mission-driven innovators and investors who are turning Africa's biggest challenges into global business opportunities. If you're a founder who's excited and building something and you'd like to share with us, please check out future.africa/fund to apply. And if you're interested in co-investing with us in these amazing innovators, please check out future.africa/collective. So today E is going to be having this fireside chat with Sahil Lavingia. Sahil is the founder of Gumroad and the founder of Sahil VC. Gumroad is a platform that enables digital creators get paid and distribute their digital products. In addition to Gumroad, Sahil is the founder and one of the LPs at Sahil.vc, a $7 million early stage fund for startups. Sahil's fund typically writes $100,000 to $50,000 checks, and so far has invested in some notable companies like HelloSign, Movable Ink, Lambda School, Figma, Haus, and more recently, Clubhouse. With Sahil is Iyin E Aboyeji. He is a co-founder of Future Africa, as well as Andela and Flutterwave. His work basically focuses on people, payments, and platforms. So he's done people, he's done payments, and now building Future Africa as a platform to support African innovators. So he's going to take it from here. Over to you, E.
Hey, awesome.
Hey.
Thank you, Sahil. I know it's super early where you are. So we're just excited you could join us, man. I
Thanks,
owe
man.
you.
I'm doing good. I'm doing good. Just doing my morning
Thanks,
coffee.
man. Morning coffee is super important. So, generally speaking, like I want to keep this super informal. It's more or less like a conversation. I'm not like, it's not like a proper webinar, despite how formal my people are being. My team's really good at all this stuff. So then they're doing all the detail stuff. But I mean, for me, generally, I'm just very curious, I think, with this conversation to
Oh, did we lose him?
He's back.
You're back. You're back. You're back.
I'm back. I'm sorry. I was hoping this thing would behave itself.
This is the way it goes sometimes.
Sorry about that, man.
Got a fund, huh? So I'm just gonna hope it's not gonna do that again. And if it does, I have a backup ready. Okay.
Sure.
So we'll just go with this. Basically what I was just saying was we're just going to talk about a couple things, particularly about how it is, how it works differently for you as a founder and VC, as opposed to just a founder or just a VC. So I guess we can start with like first of all, like what opportunity did you see that made you start Gumroad back when?
Yeah. So the opportunity so first of all, I just wanted to solve my own problem, right? So there's kind of two steps, I think, to everything that I do. One is I kind of just build it for myself, and then I have to think about, is this worth turning into a big business and, raising money and hiring a team and all of that stuff, right? There are a lot of projects that I just build and then don't do anything with. They fix my problem and it's cool and that's fine. So Gumroad, that's how it started too. I wanted to sell something on the internet, and it was just really, really hard for me to do that. It was the digital sort of piece of content. And so it just didn't make any sense to me why it was so hard for me to sell it. I wanted basically a lemonade stand on the internet. Like, why can't I just set this thing up? I needed just like all of this infrastructure. This is 9 years ago, before Stripe and all of these things had launched. So it was different.
What were you trying to sell?
I was trying to sell this pencil icon, this Photoshop, like a Mac, like an app icon I designed, like with all the layers and stuff. I wanted to sell that, and there's just no easy way for me to do it.
Interesting.
Yeah, so I built Gumroad. I did that Friday night, and then I built basically Saturday, Sunday. I built Gumroad, and then launched it Monday morning on Hacker News, and it just did really well. Resonated with a large group of people, and then it was the first time in a long time where it was like, normally I would, like, the next weekend I'd work on something new, or like, forget about it or whatever. But with this idea, like, it just kept sticking in my head. It was really the first time in a while where I wanted to like iterate on the same idea and like add things to it. And I think it was because it was helping other people make money, which was really cool. And it just like really fit in what I like doing. And so basically after a few months of thinking about it too much, I just left Pinterest and started it as a company and raised money and all that. And the reason I thought there was a big opportunity was it felt like, and it's still happening, it felt like people were just connecting with their audience, right? Before, you would have like a musician, but the musician would have like a manager and an agent and like maybe a label, and they'd have to go through like radio and like magazine interviews and all. Like now like if Justin Bieber wants to say anything, he just goes on Twitter or Instagram and he just says, hey, whatever, right? Kanye West, same thing. For better or worse, that's what people are able to do today. And I always thought that like that was step one, and step two was like they'd start selling directly, right? Like if you can talk to your potential customer base, why would you do that and then redirect everyone to a place that's going to take all your money anyways before it gets to you, right? Yeah. So that's sort of like, I believe strongly at some point that will be the default way. It just has taken longer, and been accelerated a little bit.
Why do you think it took a little longer?
I mean, I think there's a lot of value that those people do add in the pipeline, right? It's not purely an inefficiency. I think as an engineer, it's easy to look at things and say, this should all be software. Like, we don't need humans here. But the truth is, like, labels do provide value. There's a reason that musicians go with them, and authors with publishers, and filmmakers with studios, and startups with venture capitalists, right? Like, there's a reason people exist. And also there's just inertia, right? Like it's uncomfortable to do something new. You're sort of rewarded for it if it works, if you do something new. But the reason you're rewarded for it so much is because so few people actually want to take that risk, right? The reason you can get 100x outcome is because 99 out of 100 people don't take that risk, are not willing to take that risk, and will literally pay you for it. For the person who does take that risk and gets it right, they're effectively paying you to do that. That's sort of like what the economy is doing, right? That's sort of almost kind of capitalism in a nutshell. So it's so that's kind of why I think it's taken a long time, and it will continue. I don't think VCs and labels and publishers are going away. They've been around for hundreds of years, some of them, and they'll probably be around for a little bit longer. So.
I mean, one of the really interesting ones. Sorry, can you hear me?
Yeah.
Okay. So I was like, one of the articles you're best known for is the article on writing about, quote unquote, failing to build $1 billion company. Although I'll say you've been pretty successful, if you ask me, and changing the metrics of impact. And I think one thing I really appreciated about what you said earlier was that you built Gumroad because it was helping other people make money, right?
Yeah.
What, so you still had this idea of impact somehow. Like what do you think, on reflection, right? That you would have done differently if you had come out the gate with that, what is clearly an innate point of view about what good products should be able to do?
Yeah, I think I just would have approached the way that I built the business a little differently. I felt like maybe I could eat my cake and have it too, or have my cake and eat it too, where I could build this very democratized, incredibly affordable solution for creators and also build a really, really, really valuable company. It's hard to do both of those. Certainly it's possible. I'm not going to say it's impossible, but in general, there is sort of it is a level of zero sum game, right? Like the more money we make, the less the creators make effectively. If we charge 10%, they get 90%. If we charge 20%, they get 80%. So there's always a balance there. And I think Amazon actually has a really good framework around this with AWS, where they basically say, look, we're going to make roughly this gross margin on the business, right? I think it's 20% or something like that on AWS specifically. And so look, if we figure out ways to save money, we'll just lower our costs. If we launch a new product and it costs us this, then we'll charge this for it. And it just keeps you really aligned and really, I think, thoughtful about how you launch products, what's worth working on. And I think we just didn't have a strategy. We were just like, we're going to build this amazing thing and we're going to charge this and we'll see what happens. And so but if we did the math and forecasted it out, we might've been like, oh, wow. Like if we're charging this little, we're not going to be a $1 billion company. I mean, the market would have to be like this way larger, even than probably today that it is. And either then we could decide to do two things. We could say we're comfortable not building a $1 billion company, or we can say we still want to do that. Let's go, solve a different problem, or like, let's build a different solution that allows us to charge more, et cetera, et cetera, et cetera. So it's just, I think being honest about what you want and then building the business that's going to get you that, right?
So with Sahil VC, what do you want?
That's a good question. That's a really good question. I mean, I still think about it. I mean, it happened so fast. Like 2 months ago, I didn't have a fund, and now I have a $7 million a year fund. The equivalent of sort of like a 30 or so $1 million fund, because of how AngelList made it so easy. And I think I'm a little bit like I'm a little bit mimetic, where I just kind of look at the people I really like and I kind of say, hey, this is the path that they took. So like maybe this is the path that I'm going to take. I'm just not smart enough to realize it. Like, yeah, so I'll kind of start copying them and then like gut check along the way, which might not work. That's kind of the definition of cargo culture or something, right? So it doesn't always work that way. But I think I saw people like Elad, Gil, and Kevin Hartz and Naval sort of take this path where they started off as kind of CEO operators and like became chairmen and then became sort of more prominent investor types. And I think for me, what I want is I want to help. I love the early stage, but frankly, it's really hard and really painful to do it yourself.
Mm-hmm.
I mean, you've done it twice now, at least.
I've done it twice.
Twice insanely successfully.
I've succeeded twice. I've done it 4 times, but I've succeeded twice.
Yeah, exactly. I'll say, yeah, exactly. The nice thing about being an investor is like, you can kind of diversify a little bit. You can help a lot of people. You can kind of, you're not going to have your 10,000x return if you have a successful company, but you can help a ton of folks, and sort of, take a little bit of a bunch of things. And I think if I am really good at the early stage, frankly, I shouldn't even work on Gumroad anymore because it's not an early stage company anymore. If that is what I'm good at, which I think it is part of what I am good at, then maybe I should get a new job, frankly, right? And so I'm always trying to think about, like, and it's hard. I mean, it's kind of an ego thing. Like, you are the person you were yesterday, and you have to kind of make an active decision to say, actually, I'm not that person anymore. I should be doing something else. And so, yeah, I'm still trying to figure it out. And I think one of the best things about being an investor is all of these people come to you and tell you amazing things, right?
Yeah.
It's
very energizing, right? Like, you're just like, You know, I can do a full day of pitches, and then I have to decide which ones to fund, and then I just get tired. But tell me more about what kind of support you provide to founders who who get money from Sahil, right?
Yeah.
Like, what do you do? What do you do for them? You said earlier that that startups are always going to need VCs. They can't just go on the streets and get money. So why should they take money from you?
Yeah. I think I want to be like to use that metaphor of like the music, like sort of the music industry. You have artists and you have labels, but you also have agents and managers, right? And I think there's space for that more in early stage venture. I mean, this is a trend that's happened for a long time. Before there were angel rounds, or they're really friends and family rounds, and then Series A's, right? Like you'd go from figuring this thing out, and then you'd have to go buy servers, and it's like a physical thing you got to build. And so it was costing millions of dollars like 10, 15, 20 years ago. And then AWS came around, and Stripe now, and it just becomes so much easier to business and so much cheaper, effectively free. And so I think there's more room for like, hey, you might not need $5 million. You might just need $1 million or $500,000 or $100,000. And I think it's just operationalizing that, right? It's like there are all these people who are founders and who are already helping the next generation of founders and maybe doing a little bit angel investing. But there's a lot more capital out there that wishes they could do more of that. And so I just am sort of, the way that I say it is like, look, I'm just being an angel investor, except with more capital. And what I would do as an angel investor, I'm just going to do more of. And it really starts, it's as simple as like, look, here's my phone number. Text me whenever you want, and I will answer anything you want. And I've been through, at least your stage from starting a company up to a Series A or so. And now I've got 10 million in revenue a year. So it's sort of past, obviously not done. There's more to come, but a lot of it is really easy, frankly. It's just being super responsive to specific problems and speaking from experience. And often it's just like you're on the right track, like you're not thinking about it the wrong way, or you should talk to this person. Like you're dealing with this problem. Here's someone that in the 10 years that I've spent building stuff, like the best person to talk to around that. And honestly, it's easy. It's so easy to do that, right? Because all it is like shooting off an email. Being like, hey, this is a founder that I invested in. They need your help. Like, and like every single time, they're like, of course.
Yeah, Sahil, you make it look easy. I know it's not easy because I do it. You make it look easy. But speaking along those lines, what do you think that you learned as a founder that gives you an edge in angel investing?
Yeah, I mean, I think that it's like 1,000 different tiny lessons. Like, I don't know if there's like one, because the truth is, if there were,
you can give us like 3 or 4, or as many as you want.
Yeah, I mean, I think one, like, I think people underrate how difficult it is to bring on really, really good people to the company. I think people don't really realize hiring is just impossibly difficult. I mean, this is why Andela exists and is successful, right? It's because hiring is so hard. And I think a lot of founders, they read stuff and they're like, oh, it's going to be hard. And then they don't really realize, oh, wow, like the level of difficulty here and the time commitment to hiring is just insanely high. I think there a lot of it is that, right? Just saying, hey, look, this thing you think is hard is actually easy, and this thing you think is easy is actually hard. Like a lot of it is just helping founders recalibrate their expectations. I mean, I think like one of the things that's a lot easier potentially is if you have a really good grip on your business, like you should know whether or not you can raise more money. You don't need to actually talk to a bunch of investors. You can build, you can kind of tell, if you're really good at telling the story and you have a good grip on the business and if your numbers are where they need to be, I can really help founders say, hey, look, like, you're not ready to raise money right now, or you're going to have a really hard time. Whereas most founders will spend like 6 months before realizing, oh, maybe we shouldn't be raising
money. I don't have the number. Yeah.
So I think that's a huge one. I think one of the things that I think founders really also underestimate is how willing people are to meet with them, but they don't know exactly but all they see is like, I send people emails, they don't get back to me. And so like figuring out how do you actually get in front of the right people, and like writing cold emails, doing sales. I think sales is underrated. I think a lot of consumer companies, like creator economy companies I work with a lot, they say, hey, how did you grow Gumroad in the beginning? Like what marketing, what growth tactics did you use? And I'm like, it's literally in the beginning of a company, no one cares. Like you're just selling because you're like 3 months old. You have no SEO, you have no social media presence, you have no brand, you have nothing. It's literally like pushing the boulder up a hill in the beginning of the company. And so I think people underrate how important sales is. I saw a great tweet from Maya Bittner about how expensive it is to acquire customers. I think people say, oh, we have this model, we can acquire customers at this price. And that's a really challenging business. I really kind of avoid actually businesses that sort of have a growth model that's based off of CAC, just because I don't understand it enough myself. And I just think it's incredibly difficult. I think most people say, oh, I can acquire a customer for $20 or whatever and make $50, but it's rarely that simple. It's a lot more work to make that happen. They're using comps that are, that they won't be able to really implement those practices at the scale that they're at and the stage that they're at.
So how do you typically respond to founders who give you that kind of argument? Like what better version of that argument is more receptive, right?
Yeah, I mean, the best is data, right? The best is actual data that they have. That's like, we did this and this is what we see. And also I really ask founders,
basically.
yeah, and I ask founders, like there are a lot of founders I talk to who they don't have the intellectual rigor. Like they're very confident with their model. And so they're like, this is the model. We spent $20. It works. We can scale this. And I'm like, that's like saying you bought like $10 of 10% of the company at this price. If we bought 1,000% of the company at this price, it's like, well, the 1,000% doesn't exist. And you buying 10% changes the price for the other 90%. So it's not, you can't scale this. People always say that, like, well, this person made $1 billion on this return, this hedge fund manager. And I'm like, well, yeah, because the minute they do it, that return's gone. Like you can't repeat that cycle. And I think it's similar with CAC, right? Like your early CAC is the best you'll ever see often because you're targeting the perfect people. And it should be because that's what's in your deck. That's what you're pitching people. But it should be a lot. So I think people, when they see like, oh, we're paying $20 and we make 30, to me, what that says is like a year from now, you're going to pay 30 and you're going to get 20 because advertising costs are going to go up and competition is going to go up. So your LTV is going to go down. Like you're going to get squeezed on the margins. And I think just founders who have like a rigor around that are really thinking about like, look, this is maybe our launch strategy, but we're open to changing it. Or, we're thinking, this is one of the 3 paths we plan to try. I just think there's some people who are like, we're raising money, we're going to blow it all on this, and then we're going to be good. And I'm like, it's a little scary.
So give me a sense of your perfect checklist for a founder who's raising money from you. Just tell me, like, what are you looking for?
Yeah, I mean, the number one thing is quality of product. I think that's if someone literally sent me an email being like, this is the problem, this is the solution, here's a product link, I'll click the link, download the app or sign up for the website, and I'll go through the experience. That's the number one thing, because that shows me so much about, what the problem is, how they think about it, what their insights are around product development, how good they are at actually shipping features and, like simple things like that. I think.
Does it matter if the product is not targeted at you?
Sorry?
Does it matter if the product is not targeted at you? Like it's a product for somebody who's not you?
As long as I can sign up for it, like I'll try to put myself in the mind of the customer, and I'm pretty good, I think, at doing that. It's definitely preferred if it's someone like me. Like if it's if it's targeted at startups, that's really easy for me. Or if it's targeted for like just human, like a consumer app, that's great. But yeah, it's really about like, do I kind of align with the opinions of this person and the way that they think about the solution to this problem? I think that's really critical. And then I think also like the storytelling ability, right? Like I think a lot of folks really struggle with getting folks excited about what they're building. They're thinking about it like, this is a business, this is the market size, we found this thing, we think we can do it. And I'm like, that's not exciting to anybody. Like it's this goes back to my point about how hard hiring is. I think people underrate how hard it is. So they're like, oh, we're going to build a business, then we're going to hire engineers. I'm like, yeah, but your first 5 engineers you're going to have to excite them so much that they're going to decide not to work for Facebook. not to work for Google. Like they're going to work for your company that has no traction,
Exactly.
take a huge
No
pay.
money.
Yeah, and that's really, really hard to do. And I think the way you do that is you tell a really compelling story. You get people bought into the vision. You have a really good product, because engineers think similarly. Like they want to, you know, designers want to work on well-designed products. Engineers want to work on well-engineered products. Like this is just, you know, investors want to work on already successful businesses. And I guess that's the third thing is like just traction, right? Like I think people who don't lead with traction, it's challenging for me. I'm like, and the reason I'm so open about my numbers is because I'm proud of them and I feel confident about them, and I think they're good. And I think when I don't see that, I always worry that they're like hiding something. I think of it like a first date, right? Like if there's one problem in the first date, there's stuff that they're hiding. That should be their top performance, right? And I think of it, obviously they don't have to be perfect, but you know, ultimately like it's kind of a sales pitch. Like you should be operating at the top of your game. Be doing anything is stupid. And I think similar with a startup where you should come into a fundraising conversation as polished as you can be, as prepared as you can be, know the ins and outs of your business. Like I'll meet founders who are in payments and I'll ask them you know, I don't know, like what book have they read on payments? And they'll say, I haven't never read a book on payments. And I'm like, well, it's hard for me to get a sense that you're excited about this industry and like you don't need to be sitting around reading books on credit card processing or something all day long, but like you should be reading some books around macroeconomics, you know, stuff like that. And in general, I find that the founders who do that are more often successful. Because they're thinking more deeply about the problem set than most other folks.
That's very true. I mean, I remember I read a book about PayPal's founding on payment, and it really changed my perspective, right? And I just went and did what they did in Africa, and that helped. So tell me like some heuristics, just generally around like I see this and I delete the email, you know?
Yeah.
When it comes to fundraising.
Yeah. I think a big one that turns me off is just like hyper confidence. Like I got an email yesterday, I think, that was like, this thing is going to be big. And I just don't like emails like that. I read everyone regardless, but yeah, whenever someone is so confident about what they're building, like you need to invest in this, or this is going to be world changing. I just don't like those type of people. Like just personality match is not fit for me. I think people who are more excited about the amount of money that they can make than the problem or the solution or the product, that is worrying to me sometimes, just because I think there's nothing wrong with wanting to make a bunch of money, but I think you don't succeed for several years, I think, before it really looks like, oh wow, we're on the right track. There might be something here. And so if you're motivated by those early returns, you know, you're going to give up, like, because you're not going to see those soon enough. That's a big one for me. What's another big one? I would say, like, this might be a little controversial, but I think there's some folks who really focus on their identity, and not just like their race or gender or anything like that, but like their age or the school they went to, or I don't know, it's like their award that they won, or any of these things, anything that's in the past, or like something that feels like not about the company and the product. And I just want to believe that I can look at the product, I can look at the deck, and I can roughly evaluate the quality. And I don't want to be swayed by who else is investing and who you are, how young you are, old you are, or where you went to school. Because I think ultimately, it frankly doesn't matter. Like in an outlier business, you know, these rules break. It's almost like anti-rules. I think if you use those as heuristics, you're going to be in trouble. So I don't know. When I get an email that's like, I'm a 21-year-old, blah, 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 that, you know, has an idea for this and I want to build it, I'm just like, I don't care. Like, why is that so important to your identity? That you lead with it, you know? Like the most important thing about you is your age, I think is a little strange. Again, I read all the emails, but that definitely kind of gives me a little bit of like maybe they're a little too egotistic. They think they're special, or, you know, something like that, that I think it definitely triggers kind of a little bit of a red flag in me.
Love that. That's helpful for founders there. Just lead with products. So I'm like,
every investor has like a what do you call, I love the way Benchmark puts it. It's like the anti portfolio, right? Like what companies did you just literally skip out on investing in, and what like errors of judgment do you think led you there?
Yeah, so a lot of these companies, I don't know if I could have invested, but I didn't even, like, there are friends of mine starting them, and I wasn't investing at the time, so I didn't even ask, because I just started Gumroad. But there's so many of those. I mean, like, Stripe is one of those. Figma, which I ended up investing in Figma, but it, years and years later. What else? HashiCorp. Mitchell was like a friend of mine and worked actually for Gumroad for a little bit doing freelance before he started HashiCorp.
Oh, wow.
He's like a decacorn or something now. Yeah, like literally what he did before starting HashiCorp was like writing some code for Gumroad, right? So like if I had money and I was investing, that would have been a pretty easy one.
Yeah.
What else? I mean, Pinterest, like not staying long enough to vest my stock. That was like a, probably tens of millions of dollar decision that I made. But yeah, Bitcoin is another one. Like I knew about Bitcoin when I launched Gumroad. It was 70 cents. Now it's, I don't know, 10,000. So that's like and by the way, Bitcoin, when you invest in Bitcoin, it's better than any startup because it's fully liquid, no dilution. Like
I love that.
It's the best investment you would have ever made. Like Naval says this, I think, where he's like, look, Bitcoin is the best startup investment anyone could have done, right?
Yeah.
You don't have to be a VC to do Bitcoin. I knew Brian from Coinbase before we started Coinbase. So a lot, but ultimately, like
a lot, yeah.
You're gonna have so many of them.
At least I'm hearing that like you'll never have problems with deal flow. At the very least, they'll all come to you. I said, I'm hearing that, and I'm like, you'll never have problems with deal flow. But tell me, how do you source deals? Like now that you have a $7 million fund, because I'm thinking to myself, like, how on earth are you gonna get rid of all that money?
Yeah, I mean, honestly, the truth is, when you have money, people will find you. People want money. I was talking to Jeff Fagman from Spearhead, and he says, as a VC, your job is to sell cash. Right? So it's easy to sell cash. The hard part is making sure you're investing in the right companies. I think, being visible on Twitter, I really believe the best strategy is to just help people as much as possible. Like, I think a lot of people, they're like, why do you spend so much time helping people? Like, don't you have a company to run? And I'm like, Gumroad is a better company because I help people all day long. Because it makes people want to work for the company. It makes people want to use the product. Like it literally is like infinite ROI. People just like me more because I do it. And I think founders, a lot of them, like when they, especially the repeat founders, they're just like, who do I want to help? Like I'm starting a company. Who do I want on my cap table? It's not like who's going to add the most value to me tomorrow. Like who's going to help me with, it's like, who do I like? Who do I want to make rich? If this ends up becoming a big company, who do I want to support? So I think that's a really, it's a lot of it is just like being nice, being proactive, being responsive. It's honestly like not that high a bar. Like the amount of experiences that founders have, I'm familiar with this, like talking to VCs who are just like, frankly, like they're super, you have to follow up like 3 times. They take forever to wire the money. Like, there's just all these small things that if you just do it fast and simple and, you don't ask like for like a lawyer to review docs, you just do it. You just trust the founders. Like founders just want that, right? Like they want to feel like you respect them as an equal. And I just think that often that doesn't feel the case. Like the amount of meetings when I was raising money, the amount of meetings that like didn't start on time, I don't know what the percentage was, but it could have been 70% or more. Right? Like,
wow.
Obviously, it's different now because you're not running to meetings like, stuck in traffic. Everyone's just doing Zoom. So I hope it's a lot better. And certainly I'm not perfect about it. I don't want to say that I'm perfect at it. But I do think like sometimes it's just like being good and like helping people and word gets around, like right now you have to kind of bootstrap and do a little bit more work. But like I've heard from other sort of good investor friends of mine that like basically if you do a good job the first year or two, guess what? Every founder who raises money, they know some founders who've raised money. right? Not all of them, but a good chunk of them will know founders who've raised money before. And they're going to go to those founders, and those founders, they're going to say, hey, I'm raising money for my company. Who are your best investors? And I hope to come up in that list. And if I do, great. And if I don't, I'm not going to get in. And you know, the round's going to close before I even hear about it. And so I think it's really just like being over time. I think any hack, it's like a growth hack. Like eventually that might work in the early days of the company, but that stops working after a while. And then it's just like, how good of an investor are you? And that would say the third thing, which is what matters super long-term, is just, it becomes a self-fulfilling prophecy, because if you are a really good investor, if you are like, as in your numbers are really strong and you have the ability to pick really well, then people are just going to want you because they want the validation that you're picking them. Yeah. And then that's the best place to be, right? Because if you're like Naval or Benchmark or Sequoia or Max Levchin or Kevin Hartz or Keith Boy or any of these, you know, Sarah Tavel, et cetera, like then you're operating at this level where people just want you. Obviously, you're adding a ton of value. I'm not saying all that other stuff is still true, but a big component just becomes, if you bet on me, all these other people are going to take me seriously, right? Yeah. And that's the best, because then literally you don't have to do any work. You just invest in the company, and you're already adding value by just letting them put your name next to the company, and that's just huge. Yeah. So. Yeah.
Now, I've heard you tell this story before about how you started to invest in a company. I don't know, like, first of all, it'd be good to just do a Coles Notes for our audience. But I'm also very curious to understand, like, what was the thought process at the time with investing, and how did you think it was going to end up?
Yeah, I mean, I started early 2011 when I dropped out of school. I had like a little bit of money saved up, and I said, I'm just going to spend this on startups, because, you know, this is, if I want to do this ever, like it takes a long time. So like, we need to start now. Yeah. I invested in 5 companies, $45,000 total in 2011.
Was that like your tuition?
Yeah, literally.
Wow. So literally just invest your tuition in startups. Got it.
Yeah, I just took my tuition. I took my tuition, invested it in startups, and then ran out of money and stopped. I didn't have any more money to invest, I guess. And then I took a break for a bunch. I did Lambda School. That was a little bit later. I did my 2 big wins. So I did 5 companies. One of them was HelloSign, which sold a Dropbox for $230 million. And one of them is Movable Ink, which just raised a $30 million Series C, which is up quite a bit for me, 50x or something, post dilution and everything like that. So pretty good return. Wow. My early investments. I got lucky. To be frank, when you have such few deals, it's very high beta.
How did you find these founders?
So I went to YC Demo Day. I emailed Paul Graham, and I just said, hey, I work at Pinterest. I would love to invest. Can I come to YC Demo Day? And he, just said, sure. Like, see, people don't do stuff like this. Like I preach cold email all day long on Twitter, because it really, like, I have evidence that it works. I don't know if that would work today. You need slightly new strategy. But really, yeah.
You're better off putting your school fees. You're better off putting your school fees in Sahil's rolling fund.
Yeah.
Then emailing. Yeah. But tell me, but what was your thought process? I mean, in picking those specific companies, like, how were you thinking about those companies? And how has it changed over time from how you started today?
Yeah, totally. I mean, HelloSign was, I remember being at Demo Day, and everyone was using, like, you'd email PDFs back and forth, and like, it was just a terrible experience. And DocuSign, I think it was, DocuSign was already, now it's like a $60+ billion company or something. But even at the time, it was like $4 billion or something. Yeah. And I was just like, obviously this is going to be replaced with software, and they're going to have no competition, because it's boring as hell. Like, no one wants to work on this. And this founder, I just like the founder a lot. I just spoke to him a couple weeks ago, actually. Like, he's just a super nice guy who's genuinely was excited about solving this problem. And he just understood it really well. And I was like, yeah, like, you're probably, you're probably going to build something interesting. And so I did. That was the only YC company I did. And then Movable Ink I found through AngelList. I think I just was like, on AngelList looking for stuff because I didn't have a super deep network, right? Like none of these were network deals. These were me having to go find stuff. I found Movable Ink through AngelList, and I met with a bunch of companies off AngelList. And the thing that excited me about them is like they were super early, but they had a really interesting idea around email marketing. Basically, their technology was, you send out an email and it's frozen in time, right? If you send me an email, you can't change the content in that email. And this was at the time of like Groupon and all of these things like really growing like crazy. And those deals become very out of date very quickly, right? And so what they figured out was basically they sort of built this tech to allow the images to refresh in the email clients, which is like not super easy to do. It requires some amount of technical complexity. And so basically you can send an email, but when they open it, that's when you actually render the image. And so you can actually say like 3 hours left, 2 hours left, 1 hour left, depending on when they open the email. And I just thought that was interesting. I was like, this is clearly a problem that people have. And it seems like this team really understands how to build the solution. And again, boring. like they're not going to have that much competition because it's boring. And I think that's a big trend in my life is like, if you look for boring opportunities that are big, like, you might find a lot of these things that are just lying there waiting to be made better. Right. And then I didn't do any angel investing from 2012 to 2016 when I was focused on Gumroad. I missed out on a lot of good companies, but that's the way it goes. And then I did Lambda School in 2017. That was the only investment I did in 2017. And then I didn't do any until 2019 when HelloSign sold, and I finally had more of a sort of more money and liquidity to do a bunch. So like, yeah, basically out of the first 6 deals I did, Lambda School, Movable Ink, and HelloSign, like pretty solid ratio. But I was really, I'm only doing 6, right? Like, so I'm very careful about like the stuff that I invest in. And then, but my mental model is similar. I would say it's a little different in the sense that I'm probably more biased towards investing in more things. I'm not looking for everything to work. I want to kind of invest in things that have high upside, but also high failure rates, like high beta. But there's a few things that are still true. Like these have to be really interesting founders that I like hanging out with. Like I think there's some personality and charisma that I'm attracted to. They're really good at building stuff. They actually have like deep technical experience. They have a product. This is one of the things that is a shift, is like all these companies had products when I invested, where nowadays you'll meet someone and they have no product and they're already raising money. And I'm like, a lot of those times, unless they're like just insanely competent and I just love them to death, I'm not going to invest, because I'm just like, you can raise money, and I'm not saying you shouldn't. I just cannot invest in something this early at this price. So that's a decision that every investor has to kind of decide where they feel comfortable. It's so easy, and I really like, with all of those companies, I was just in or not. Like I didn't look at who else was invested. I didn't wait for a lead. I just said, look, I'm in. If you let me in, like I'm happy to do it. I'm a nobody. At that point, I was a nobody. I still consider myself a nobody. Like I want to fight for a deal like I'm a nobody. And that's just really important to me. I like investor, founders choose choose me because they think I can make it. And I still today, like I treat every email I write like I'm a nobody. Like that's a huge philosophy of mine. That's the way I try to conduct myself whenever I meet somebody, is the same. And I think that helps, get into stuff, because founders don't want to feel like they can't ask you a question because you're going to think they're stupid, or, things like that. Like it's so important to feel like this is just, maybe they're a little bit more successful. They're a little bit, down the road or whatever. But, the thing with startups is you never know where people are going to be 10 years from now. Right. And so you should really treat everyone really, really well.
Hey, sorry about that.
I like it. This is authentic.
Sorry about that.
Yeah.
It's without, but here we are. I'm so sorry. Okay. Well, I heard you the you're nobody, which you aren't, but I'm kind of now and kind of TikTok.
No one's a nobody. No one's a nobody.
No one's a nobody. You're Sahil. So let me I'm gonna try and switch gears in a few minutes and start taking questions because I think folks have some really exciting questions to share with us. But before I do that, I want to kind of talk through two things, right? Number one is about like your investment thesis and your view of the future. So all this show invest in the future. How does your perception of the future guide the way you invest?
Yeah, I mean, I have a really simple mental model for what the future looks like, which is more people doing what they want and not doing the stuff they don't want, and everyone being able to sell anything to anybody, and like less crap in the way, less bureaucracy, less people in the way, less middle managers. You know, this kind of fits in with the whole social capitalist thing. It fits in with AngelList and Gumroad and the App Store and the iPhone. It's just people want to connect with people. People want to lose weight. People want to do these basic things. They, you know, eat good food, etc. And the best technology just like removes stuff. They don't even have to think about it anymore. And so I'm always looking for things that, you know, increase liquidity, increase democratization, connect people, allow them to transact, allow them to talk to each other, allow them to build relationships, make something expensive cheap, make something far near, make something difficult easy, make something complex simple. Like that's the technology that I love. And so I'm always looking for that. And then I would say the other sort of set of things that I look for are things that I would use. You know, I really think investors, everyone has a bias, everyone has a taste profile, everyone has, just like you have different kinds of food that you like and different kinds of art that you like and different favorite movies. Like everyone has the things that they're really interested in. And I'm really interested in, you know, consumer social products that I use. I love sharing stuff. So I'm always looking for apps that I can use to share stuff. And like, I love thinking about experiences, and reflecting is a big part. So I like tools that allow me to kind of like do that and like analyze data, like things like Causal, I think are really interesting. Airtable, Notion. And then I run a company, right? So I'm always looking for like, what does the future of Gumroad look like? And what tools can we use to make Gumroad a more efficient, better company? And so I'm always looking for products like that as well. But a lot of it is the founder, you know, it's the founder's job to come to me and say, hey, this thing that you didn't know exists is a huge problem. And like, we have this really interesting, clever solution to it that we're really passionate about. That's the kind of the framing that I really, really, really like.
Yeah. Yeah. Gumroad for a little bit. I mean, you were telling all of us that you failed on $1 billion company. Are you expecting them to be $1 billion companies, or are you cool with them just doing good work?
Yeah, that's a really good question. I mean, I'm honestly still trying to figure that out. I tell people, look, like, I don't think you should aspire, like, you shouldn't sort of chain your identity to building a $1 billion company or not, but this is the financial model of an investor. I'm typically going to look for, you know, this kind of profile and outsized returns. And this is, you know, don't sign up for this unless you're interested in that way. And I'm not going to force you. Like, I would never exert any pressure on a founder. Like, I just think it's a waste of everybody's time. I don't know if that's ever worked in the history of startups. Like, it just seems to like make it worse for everybody. But I think in general, I just say, look, like, you should, if there is an opportunity for you to build a big business, like, you know, that's the path you should probably consider taking. And if you're not interested in that, like, don't raise money.
Yeah.
Don't raise a lot of money or raise from different people.
You go for it.
It's really just about managing expectations, right? To just make sure that, like, what's in your head, telling me what's in your head. Like, I don't want founders to say, oh, I'm going to raise money and then build a lifestyle business. If you're thinking about it like that, like, that might work in the short term. Like, you think you're getting a good deal, but that's just going to make life worse for everyone. And the other thing I would mention is, this is a long-term game, right? Like, I'm going to be an investor for the next, I don't know, 40 years, like a very long time.
Maybe
unless I'm terrible. Yeah, like this is early. It's early days. Like I'm 2 months into a 50-year journey, and so I'm looking for people who are, signing up for something that they really want to be a part of for a long time potentially.
Yeah. Would you invest in Sahil of back when you were studying?
That's a great question. I think I would have, because I was just insanely sort of driven and focused on a very specific problem. But I would have pushed, I hope I would have pushed myself to be more strategic about figuring out, like, is this the thing you want to work on for 15 years? And have you thought deeply about the business model? But it was so early that I think the creator economy wasn't even like a phrase, in 2011.
Yeah.
So I the other thing is I might have told myself, like, you're getting ahead of yourself. Like, you're way early. Why are you raising so much money? Are you ready to commit to this? Luckily it worked out, but certainly, I sort of like took a leap of faith, and if I had picked the wrong idea a year or two in, I might've been like, shit, why did I decide to work on this thing?
Yeah.
I think I definitely got lucky there.
We all get lucky.
Yeah, luck is always the part. Anyone,
Yeah. Let's talk about rolling funds for a bit. What do you think surprised you the most about a rolling fund?
Yeah, I mean, I think I underestimated the amount of interest in early stage venture. And I also underestimated the demand of founders for better quality investors, or different. I wouldn't, maybe not better, but a different set of investors that maybe they're used to. I think, and the macro has definitely played a part in this. I think the crazy stock prices are driving everyone to find yield earlier. And so I think that's a big component. But and then I would say the other thing is it was just a lot easier. And I wouldn't say easy, like, like in the traditional sense of like, oh, it's like I just like sent out some emails and raised a bunch of money. But like there are a lot, it's very manageable. Like you can figure it out. Like I think a lot of people get turned away because they get, they don't know how to think about the finance, or they read some book and they don't understand all these terms or whatever, and they don't have a finance degree or an MBA or something. But like a lot of this stuff is it's just like starting a company, right? Like the amount of stuff you have to learn on the job is insane. But like, guess what? Like that's how it works. Like people figure it out. You learn the things you need to learn. If you don't, you die, right? So I think it's just, I always recommend people do it if they want to, because I think if you really want to, you'll figure that stuff out. Like it's not a huge deal. So that's, and then I would say I was surprised by how popular it became. Like rolling funds has kind of become a meme in short order. And I was just surprised. Like I didn't really, I thought it'd be cool. People would like my fund and it was like interesting. But I think it struck a chord much deeper with a lot of people than I think anyone, even AngelList or Naval or anybody else, was really expecting it to. It kind of pivoted the whole company, which is actually really
cool. It did. Interestingly enough. Awesome. Well, we're gonna go over and start doing questions. I don't know. Do you have any last words? Anything we should be thinking about?
No. Yeah. Let's do questions.
What are you gonna build this into?
Yeah, that's a good question.
What's the biggest it gets to?
And then any last words?
Yeah. I mean, I'm very appreciative of you doing this. I think this is great. I think ultimately it's, 2 months ago, I would not have said anything close to where I am today. So I'm always like, I have a Notion doc that I have that like, just cause people kept asking me like, where, what do you plan to do and where does this go? And I'm like, I should probably have some notes around where I think this might go and the different options I have. And I sent it to AngelList too, because I was just like, look, this is where I'm thinking about it. So just so you product roadmap wise, like this is how one of your customers thinks about it. So, just so you have it, you can share it internally or whatever. But I'm just like, I'm a $7 million a year fund, might grow to 8, 9, 10 million. If it gets there, I'll probably cap it. Honestly, I think at that point I might have to reconsider my like time management. And I want to just make sure that I can invest in good companies. Like I just want to make sure that I'm able to find them. And then maybe one day I'll be a professional investor. I might step down as CEO of Gumroad, or I might say, actually, investing isn't for me. I'll keep it a part-time thing. I don't know exactly where things go. I think that the thing I can say is that I'm just going to be incredibly public about it. Like, I'm just going to share everything. Like, everyone will know if I'm a good investor or not. For better or worse, 10 years from now, I'll tweet, just like I do the Gumroad numbers, like 10 years from now, I'll tweet. Q3 of 2020, I invested in these 13 companies. I deployed $1.3 million. What happened, right? Like, did that turn into a zero? Did that turn into 13 million? Who knows? Just because I think it just will keep me accountable, and I think it's helpful to people, right? It's just data that I think doesn't need to be private, so why make it private?
Yeah.
So.
Questions, because I'm sure a lot of people have interest at the top, and then you can ask your questions. I think he's already answered, so I'm just going to kind of pick. So give us a general sense with respect to like valuation range, and maybe even say a little bit about how you think about valuation and stage when you invest in startups, and what metrics you look at to judge whether a startup is at the right stage.
Yeah, so I really try to find pre-seed and seed companies. I've been getting, actually this quarter, I'm not sure why, but we're getting a lot of I'm getting a lot of A's and B's, and I normally just say sorry, like that's too late stage for the fund. What I do want to do over time is I want angels to have polling, so I could just ask my LPs, like, do you want me to do a Series A deal in this? And just to kind of create a dialogue, I think would be really fun and cool. I think otherwise, pre-seed and seed, I'm averaging around $10 million post-money valuation in the companies. And
why don't you just do
a what, sorry?
A syndicate on AngelList?
Yeah, I've thought about doing those. I probably will do a couple, maybe one a quarter or less. I just don't want to like spend too much time, honestly. Like, I don't want this to, it's very easy for this to become a full-time job, and I'm just trying to be cautious of that. Because it's so much fun. It really is a lot of fun. Yeah, so that, and then in terms of metrics, what metrics do I look at? It's just, I pre-seed, so it's normally just like quality of product. If you have traction, I'll look at the traction. And a lot of it is like my goal, but like ultimately what I try to vet is like, will this startup be able to raise a Series A, right? And so I don't care about metrics, but those people do. And so I just want to make sure that the founder is aware of the metrics that they might want or need to sort of raise a really nice Series A for themselves, so that they can pursue their goals. And so I really just make sure that they understand what those metrics are for their business. And that's a place I think I can help a lot, because I've seen a lot of companies go through that kind of stuff. And I talk to a lot of investors all the time. And going back to the agent metaphor, like, this is what agents do in Hollywood, is they kind of negotiate, kind of like, they give you a little bit of space from the people directly. They kind of make sure that, you're not the one in the room. You might agree to something you might not want to agree on, or what have you. It's nice to have someone do that for you. There's a little bit more objective, because they're not as they're not as heated in the moment. This isn't like they're one company that they're really trying to make work.
Yeah. Yeah. Awesome. So I'm just gonna skip it, because I think that context. Well, I had a question actually, Sahil. You said there wasn't any stripe when you started Gumroad.
Hi, I can't hear you, but I think I heard some of your questions. I can answer that question. I think
I got it. So I was.
You're still talking about Stripe, right? Like how did the the space look back in the day.
Yeah, like how did you collect payments on Gumroad without Stripe?
Well, we did use Stripe. We just used the beta. This is like before they launched. I knew John, so I just pinged him and said, "Hey, I have this weekend project. Can I use a beta key?" And he said, "Sure."
Okay.
Otherwise, I would have used like Braintree. I guess would have been the other option.
Yeah.
Yeah.
Yeah. Awesome. Awesome. A bunch of people asking, when are you coming to Nigeria? I know you invested in a Nigerian company. Why don't you do that?
Yeah, I do want to come to maybe after COVID. I would love to do a trip. I've been to Zambia before. That's the closest I've come. So I would love to do some events and stuff there when things are moving again. I would absolutely love to do that. You cut out again, by the way. I don't know if that's my connection. I'm just gonna take some questions while you pop back.
Yeah, sorry about that. You can take the questions actually. Why don't you do that?
Awesome. Yeah, I'll try that.
Yeah. I trust that you would have better judgment than I do about what you want to answer.
Let's see. I'm the host now, so I can do this.
You're the host. Yeah.
Okay. Yeah. Let's see. How much control do you think would be too much when you decide to hands off? I don't know. This is we'll figure it out. That's definitely kind of a gradual. It will be a gradual shift for sure. I think. I don't want to just give someone the reins and walk away tomorrow. I think that would not be a good idea. Someone asks about software, and I definitely love software. I do software, deep tech, hardware, but software is my sort of wheelhouse. So yeah, I definitely focus on software, but I've made exceptions to that rule. Every rule has exceptions. So if it's an exceptional business, like I'll always take a look at it, and like I only invest in exceptional businesses anyways. That's every venture fund has to do that. Someone asked about pitching. Like the best way is to send me an email with a deck to sahil@hey.com. Someone asked what's the minimal capital for investment in terms of LPs into my fund. It's $50,000 a year. In terms of me investing, it's $100K check size is the minimum that I do. Someone asked, do I read my email? Yes, definitely. I read my email. If you email me, I either will not respond or I will respond almost immediately. That's kind of the two options for me, now or never. And just make sure, I kind of said before, but like just be really clear and succinct. Like no small talk. I don't care how the weather is. Like just say, this is the problem, this is the solution. What do you think? Make it as easy for me as possible to understand what you do, why you do it, etc. What else is here? Yeah, someone asked, can you invest with your skills? Which I actually think is a really good question, because a lot of people ask me, like, I don't have money, but I want to, one day maybe be a VC or have a rolling fund or whatnot. You need equity. You need proof that you're adding value to companies, and the best way to have proof is that you have a percent of these companies. And the way you do that is you just, kind of talk to them and say, hey, I don't have money, but I would love to help. This is the way I want to help you. And, I would love a little bit of advisory stock for that. And you might be surprised at, like, if you're willing to put in the work, how little investors do and how much you can do. And you will, you can definitely get that. I think, especially if you have skills that are useful for the company, as like a designer, engineer, et cetera, like you might be surprised. Someone asks, do I invest in startups founded by teens? And as mentioned, I don't care about your age. You could be 80 or 8 years old, as long as you're building an interesting business. Like I don't care. I think any absolute rules like that, like are worse than not having them, or worse than having them. Yeah, worse than not having them. Just because you never want to say no to like the next big crazy thing because of like some random number or, something like that. Someone asked, do I invest in solo founders who are non-technical? Yes. The question I always ask is why? Like, why are you solo and why are you non-technical? And you just need to have good answers to those questions. Like if someone started a band but doesn't play any instruments or doesn't sing, yeah, you can totally start a band that way. But the big question is like, why would you do that? Why aren't you learning those skills? So yeah, so that's definitely definitely a thing. Someone asks, is it necessary to be a founder before starting a fund? It's not necessary, but I do think it is. Obviously, I'm talking my own book here. So like, take my advice or my thoughts with a grain of salt, but I think the best investors are at least pre-seed. This is all sort of caveated with like, we're mostly talking early stage stuff. Founders want to, they want to take money from people who've been through the gauntlet a little bit, because that's how you're going to help. Is this just the fact that you've done it before, right? Like if you want to, I don't know, I'm not saying all the best coaches have been players before, but they have an intimate understanding of the game. And one way to have an intimate understanding of the game is to play the game for a long time and be pretty good at it. So I do think that is definitely helpful, but certainly not necessary. I don't think anything is necessary. Someone told me the only thing you need to be able to do to be an investor is to invest and raise capital, and that's it. Your primary skill, your fundamental skill is actually raising money, not investing. Obviously, you should, over time, you need to be good at that stuff. But in the beginning, you just have to be able to answer the question to LPs, like why should you, why do you deserve this money? I don't care about traction at all. I really think for the stage that I'm at, I actually think traction is a negative signal for me, not because it's bad. Traction is obviously not bad, but just because if you have traction, like your terms are, you're going to be an expensive company. You're going to be able to raise money from a lot of people. I'm trying to make the bets that most people wouldn't make. And so that often means, post MVP, but pre-revenue, pre-product, pre-traction, like significant traction. A lot of bets on the product and the team, I think, are what really are important to me specifically. But every investor is different, some investors. So you just, every time you write a cold email, a lot of folks asked about cold emails and stuff, like know the person you're sending it to. Never copy paste an email. If you send me an email that looks like an email you sent to 50 other people, like I'm not going to read it. Every time I send someone an email, I go to their website, I go to their Twitter, I like learn about the person before I send them. I don't send a ton of cold emails, luckily, so I can do that. But, treat every email like it could change your life. And one might. But if you don't treat any like they might change your life, none will. That's a good tweet right there, actually. Maybe I'll tweet that after this. What else is here? What are 3 things you would look at before investing? Yeah, product, team, and traction if you have any. But really, product and team are really just like by far. And product is just a proxy for team, right? Like if you're a good team, you should have a good product, and if you don't, like you should have a really good answer for why you don't. Obviously, this is software. If you're doing hardware and things like that, like the answer might be, well, we need to raise a lot more money before we can build a car or what have you. Joe asks if I'm a one-man team. The answer is yes. I get a lot of emails actually from people who are like, do you need help? And I'm like, no, like I do need help, but like, I don't want it right now because I want to get good. I want to become a good investor. And that means doing a lot of work and doing all the bad parts, like all the not fun parts, because that's how you improve stuff. Is you deal with stuff long enough, you get frustrated, and then you fix it, just like a company. So in that way, it's very, very simple, or similar. Sorry. My level of involvement with founders is quite low. Like I'm not gonna operate for them. I'm not gonna manage for them. Like it's a 1 out of 10 in terms of how involved I am. Like that's their job. Like if I'm doing that, they're screwed. Like they're gonna die. So I really think I am someone said this really well, I forget who, but like, you're not the parent, you're the grandparent. And so like, I try to be the grandparent. Like, you can ask me for help if you need it, but day to day, it's your company. You should be the one building it. Don't expect your investors to help you that much. Investors are really good at helping you if you're succeeding, because they can intro you to people. They can, like, all the people want to work with you anyways. Like, they're just making your life easier. They help you raise more money if you need it, etc. But if things aren't going well, like, you should really understand, like, that's your problem more than anybody else's problem. Someone asked, do I secretly hope to build $1 billion company? Well, if I said that, it wouldn't be a secret. Honestly, the reason it would be fun to do it is because it would just be fun. It would be funny to write an article called I failed to build $1 billion company, and then to build it anyways. 10 years later, it's not going to happen tomorrow. It would just be funny. And I optimize for fun. Like, I optimize for interesting stories that are fun to tell. So it would be definitely comedic to fail to build $1 billion company. Would be a good blog post sequel. All right. Yeah, I think I answered most of the questions. Let me know if I did not. Let me go to the bottom and see. Oh, there's more. There's more coming. I don't like looms, honestly. I thought I would. I asked for a couple, and then I realized the problem with a loom is you can't skim. You can't, like, there's no text search. Like, a video, to me, is just not great. Like, I'd much rather have a PDF that I can look through. And it's also, Loom says this is going to take 2 minutes, but the truth is it might take 5 minutes. It might take 5 seconds. So I think in general, this is a really important thing. I think is like, look, your startup should be unique and interesting, but the way that you fundraise, if you don't need to do something different than the standard, you should do the standard, because it's just going to speed up the process. It's not going to create like a weird, different thing that investors are going to have to think about, right? So you should really try to figure out what is a common thing. Like, don't like make a deck and then send it to investors. Like, make a deck, talk to some founders, get some feedback, improve it, talk to some friends. Like, the first time an investor sees your deck, it should be on its like 10th iteration. So that's definitely something to consider. Is the investor should be the last person you talk to after you talk to everybody else. Don't waste those opportunities. When is the best time to exit a business as an angel investor? Never. Like, I invest the plan to never ever exit unless forced to by the company because they sell the company. Look, power law returns, you're not going to see most of the enterprise value until years 8 to 12. So like, just don't invest unless you're willing to lose the money. The reason I was able to invest $45,000, I mean, that was like, as a percentage of my net worth, I mean, that was like, I don't know, like my liquid net worth, it was like 99%. I mean, it was basically everything. I was 18 and that was my, I had made some money from selling iPhone apps and stuff, but I didn't have that much cash. But I could do it. I was young and like lived by myself and like, it was cheap. So, and I had an income. So, just don't invest more than you can lose. And that could be 5,000, that could be 5 million, depending on who you are. So that's all fine. I mean, best advice you'd give to your younger self is on investing is, I wish I did more of it. I just wish I started earlier. I mean, I started pretty early. So yeah, just more, just like, it takes time. If you want to do anything, takes time. Any skill you want to learn, you have to do it. It has to hurt a little bit. It has to be, you have to sort of have that feedback loop. And so I just think I wish I did, 2012 to 2016, probably should have done 1 or 2 a year, and just kept doing that every year. So yeah. Someone asked about valuing companies when raising money. I mean, again, standard, like what is the standard? Ultimately, the market has a sort of position on, early stage, pre-seed, seed, Series A valuations, dilution, how much money you're raising, et cetera. So I always prefer like to just pick somewhere right in the middle and make it easy for everybody to say yes or no. You can certainly like push up or down or whatever, but like ultimately my goal is really low friction. Like how fast can I make this process? Give everyone a good deal where they feel like they're excited about being participants in the company, and then and then moving on and continuing to build a company out. Someone asked about DocSend. That's fine. I prefer PDFs, but doesn't matter to me. I'm building my own software right now, so soon people will just be able to apply through a form and upload the PDF directly. Would I frown on a founder who's waiting to secure capital before leaving a day job? No, very few people can do that. So, no, I don't mind someone being fully employed. I actually reach out to people fully employed, asking them to quit. So hopefully I can invest, or I'll invest saying, I can be your first check and you can quit your job. So I actually think that's a great thing. Most investors don't do that. I can sort of differentiate. Will you respond to a request for advice on a proof of concept? The more specific the question, the more likely you're going to get a response. So just keep that in mind. What was the last book you read about investing? I just read The Psychology of Money by Morgan Housel from Collaborative Fund. Really nice guy, really great Twitter follow. Highly recommend his tweets, and his book is really good, really short. And it isn't really about investing. I mean, it's about money, but yeah, investing is a big part of it, but not startup investing, just investing generally. Has some really good thoughts that I generally agree with. Someone asked about crowdfunding. Yeah, it's great. Crowdfunding is great. I mean, like, definitely you can build a portfolio, very strong portfolio, off of just participating in syndicates on AngelList or doing Republic stuff. If you're sophisticated and you can pick the right companies, like, there are companies on there that will be 100x returns. You just have to find out which companies those are. And ultimately, it's a skin in the game thing. If you want to be a good investor, you have to invest in things most people pass on, and exercise your judgment. That is always the key to investing. It's really, it comes down to, did you invest in Uber when no one else did? Did you invest in Calm when no one else did? And that is a lot of what it comes down to. You need to flex that. And frankly, most people are not comfortable. Most people are not comfortable making those sorts of decisions, which is why I think there is a dearth of early stage investors, and why I want to do it, is because I am willing to make those decisions, and I enjoy it. What else? Yeah, I mean, a lot of it is, again, like product quality, team quality. Why are you worth investing in? A lot of people I get emails from saying, hey, I have a company, we're really great. It's not specific. What have you done? What about you is interesting? Look, the truth is, 1 in every 1,000 companies, I'm going to invest in maybe not 1 in every 1,000, but 1 to every 100, 1% or less of the companies I see, I invest in. So you should always be thinking about and be honest about it. Are you in the top 1% of founders that you know? And if not, why not? Which is fine, by the way. Not everyone starts there, certainly. But you should be honest with yourself, get really good, and get yourself into the 1%. You're not going to get there by just thinking more and being on Twitter or whatever. You got to work. You got to get good. If you don't know how to code, learn to code. If you don't know how to write, learn to write. If you don't know how to sell, learn to sell. If you haven't built anything, build something. If you're waiting for money, don't wait anymore. Figure out how to make yourself as unique as possible, because ultimately people are always looking for leverage, and the stuff every investor wants is the easy stuff that obviously you're going to turn the money into a lot of money. You don't even need the money anymore. So you basically need to get to a position where you don't actually need the money, and that's when all the people are going to want to give you all the money, right? And so you never want to be in a position where you need the money. If you're in that position, you're going to have a hard time. And so I think some concern I have from founders is they kind of blame investors for not investing or whatever, but it's look, no one deserves money. No one deserves your time. Everyone is selfish and in for themselves, and it's your success is your responsibility, just like your happiness is your responsibility. So ultimately, you should be an amazing founder. You should build an amazing company. You should be able to do it without raising any capital, and you just need to take full responsibility for that. And if you do, and you're willing to do that, and you're willing to be honest for yourself, then all of these other things you'll be able to do. But I know so many people, friends of mine, that are like, for years they've been trying to raise money for a startup, and I'm like, look, you don't deserve it, frankly. Like, you're just writing emails and writing decks, like trying to raise money. Like, go build something. And then, why haven't you learned how to code? Oh, I'm busy, I'm not good at it, like it's going to take too long. And I'm like, okay, then you won't raise money. Like, you'll spend 10 years saying that it's going to take too long to learn how to code. Certainly it doesn't take 10 years. So I don't want to demoralize anyone. I just want to really stress, like, you got to be exceptional. And everyone, I really fully believe everyone has the ability to be exceptional. Not everyone will, definitionally, but it's possible, and it's never been easier and freer and cheaper. Like, the data's out there, the knowledge is out there, but it's hard. It requires a lot of work. And ultimately, the webinars like this are really useful, and hopefully a little bit inspiring and stuff too. But ultimately, it's a lot of work. Like, when I, E mentioned, 2 successful companies, but that's not it. That's not all you've worked on. There's some iteration.
4 failed companies,
4 failed companies.
2 successful companies.
Yeah. And people don't talk about that kind of stuff, right? I mean, Gumroad was like my first successful company, but I've had many projects and multiple, at least one company failed. No one knows about it. I've had many apps on the App Store, some of them with hundreds of thousands of users, that didn't work. I mean, if you Google my name, you can find stuff somewhere on the internet about these projects. 2007, 2008, 2009, 2010. In 2011, like, in parallel to Gumroad, I had some other projects, in those weekends that didn't work. So you got to build stuff. Like, it's like, your first thing is probably not going to work. It takes time to build those skills up. You might not raise money today. You might raise money tomorrow. You might raise money 5 years from now. You might never, but that's not the goal here. The goal here is to build a great business and get really good at building products and earn a living, so you can provide for the people that you care about. And that is a lifelong, that's something I think it's okay if it takes a little bit longer than you might want it to take. In my opinion, it should be fun. You should be enjoying this, like, and so, yeah, that's kind of like my little rant. But it's fun. Like, you should enjoy the raising money process, even though it's not all fun. Like, holistically, you should be learning and enjoying the process. And honestly, it's amazing. Like, when I raised money for Gumroad, even when it sucked and we failed, it was still amazing, because I could learn all the, so much. I could meet all these amazing people. They were spending their time with me and my company and helping me think through it more and more and deepening my understanding of the problem. And I always like that. I guess maybe that's like the other thing I look for is, and I don't want to say, oh, people should be like groveling at my feet when they meet with me or anything. No, not at all. But you should be grateful for the opportunities that you have. I think, it's never been a better time. Like, I'm grateful to just be alive in 2020, even though maybe that sounds weird to say. It's just, and I always look for people who are optimistic, who are grateful and are, excited about building stuff. And so, that's something that I always kind of try to stress. Yeah, let's see what other questions people have. Someone asked how I got to Zambia. There's a charity that
I'm loving this, by the way. This will be the format for all our be like 1 hour of talking, and then you just answer all the questions.
Yeah, and look, ultimately, like, I mean, a lot of folks, the number one question I get that I honestly really dislike, to be frank, is people say, will you, I work on blank, would you invest in this kind of thing? Stop asking that. Like, just ask, like, you're asking the question before the question. Just ask, like, just say, this is what I'm doing, and like, we're raising money, or, we'd like to, what do you think? Because the problem that I have when people ask, would you invest in blank? Like, would you invest in non-US companies? It's just like, you're making an excuse not to do the work. You're saying, oh, I don't want to do the work yet. I want to make sure that he's interested before I do any work. And definitionally, if you're making an excuse not to do the work, I'm not interested, because I want to work with people who are doing the work anyways. Like, I put decks together for ideas that I'm not even working on, because I just want to think through the storytelling component, and I want to work with people who do that. And so I always sort of, whenever I see, questions like that, if you ever ask, would you invest in this? Like, that's the wrong question to ask. Just ask for investment on the thing and get it all the way there and put in the work and the time. And people notice. I think people notice when it's a 5-minute email versus a 3-hour long email. It might be 3 sentences, but I can tell that you put in the work to do the research and read the stuff. And again, top 1%. How do you make sure you're in the top 1% of emails that I get every day? And just make sure that you get there. That's super, super key. Someone asked about SPACs. I think SPACs are great. I think obviously the public markets are looking for yield, and SPACs are a great way to get a lot of tech companies public, or not just tech, but right now tech is the focus, tech companies public really quickly and taking advantage of the macro, which I think is great. And again, fits into my vision of more liquidity, more democratization. More people should be able to do this. Let me see. Business strategy question. What is the strategy? Expand the reach of the product. Wants to build several small products. No, pick one product. To me, that just says like you don't know what you want to build. Pick one product and build that. I get some emails that are like, I have 2 companies. Which one would you invest in? And the answer to that is none. I want you to be high conviction. Like, you're asking me to be high conviction, but you're not willing to do it yourself. So that definitely, pick a strategy and then, communicate that to me. But yeah, the less is more, I think. One revenue stream, ideally, one product, et cetera, et cetera, et cetera. Someone asks, you mentioned learning how to code. Is it important for all founders to have some knowledge in coding? You should have some knowledge. Yeah. If you're building a tech company, you should have some knowledge around coding. You don't need to know how to do it. I don't code every day, but I have some knowledge in it. Just like, by the way, if you're a real estate person, you should have some knowledge of construction. You don't need to be building the business. But if I ask you, like, tell me about the floor, like, yeah, you should be able to answer, what is that floor? Like, how much does it cost? Does it, what is the next, range up? Like, these are, again, this just communicates that you care about what you're doing, because these are questions you should have answers to because you care and you are interested in what you're building, right? If you're building an iPhone app, but you can't answer, is, React Native or Swift, like what are the pros and cons? To me, it just says that you don't care enough. For me, you might care enough for you. I don't, but if I want to work with those kinds of folks. Yeah. What would I say about Jack with Twitter and Square? I'm not an investor in Twitter or Square. That's what I would say. I'm not saying you can't be successful. I'm just saying that I would never work for either company. I'm not going to work full time for a person that doesn't work full time. I've told Jack this personally. If you were to join a VC firm as a GP, which one would it be? I love Benchmark. I love First Round. I love Sequoia. So yeah, there's some great VCs out there that I have a lot of admiration for. Those are my top 3. Someone asked.
You answered the question about exit.
About which one? Sorry, I missed that. Which one?
Exits.
Exits.
What do you think about exits? Yeah.
Yeah, I try not to, honestly. It's so far along. I'm just like, who knows? It's so unpredictable. Some things that you think are going to be massive fail, and things that you wouldn't expect just randomly see a huge uptick. COVID happens and everything changes, right? So ultimately, I try not to think about it too much. But I do think as I get more sophisticated, I will want more of a strategy. But right now, just focused on the present. Someone asks about leaving Pinterest before you vested any of your stock. In hindsight, would you have done it again? No. A few months for tens of millions of dollars is it's definitely not something I would do again. Like that is a stupid thing to do. But I'm definitely better off for it, but still in the moment, you know, I'm very grateful. I wouldn't have met my wife and all these things that would have happened since, right? My life would be totally different. But yeah, in the moment, no, I think it was objectively stupid. And egotistic, I think, too, of me to think that I could just replicate that, you know, again. Awesome. I think I answered mostly everything. But yeah, do you have any other questions, E?
You know, I think you've answered quite a number of questions, and we can call it a day.
Awesome.
You dedicated quite a number of hours to us, and thank you so much. A few last words. We didn't ask you enough questions about Africa and investing in Bitcoin.Africa buy coins. I mean, I would love to hear from you. Like, how much more do you think you're going to do in Africa?
I want to do more. You know, I'm definitely open to it. I've done a couple companies, and I'm looking at more. You know, it's just, and now that I know you and other folks, like I'm trying to build a network so I can do diligence better and do more of these deals. But yeah, my guess is every quarter I'd love to do at least one or two, you know, to always have some exposure to it.
Yeah.
So like maybe a few a year is probably what I'll try to aim for. You know, one in Africa.
I'm gonna be completely shameless, and I'm gonna say, you know, if you want to do deals in Africa, you can subscribe to the collective, and we'll send you 5 deals a quarter, and you can pick one.
Yeah, that's I'll definitely subscribe. I'll put my email there too for anyone who wants to send me. But yeah, just, you know, one of the ironic things is some people ask me, like, why are you so transparent about like the kind of emails you want to get? Aren't you afraid that all your emails will look the same and you won't be able to decide? The truth is, like, I'll tell people exactly what I want, and 90% of people won't listen. So I try this. I like go on Twitter and I say, this is exactly how we should do it. And then people don't listen. So pay attention. The devil is in the details. And that's what matters. If you're building a company, like the things that matter are, you know, paying attention, you know, following through, just being really diligent about everything, you know, for a long time.
Awesome. Thank you so much, Sahil. I really, really appreciate you coming on board. And I guess, you know, 5 minutes after 6:30, it's a good time for us to wrap it up. Thanks everybody for showing up. Once again, just letting you guys know that in a couple days, 1st of October, we're opening up the collective. If you want to subscribe to the collective, just go future.africa/collective. I think somebody really kind can put that in the chat box. Adenike or Binja. And then you can subscribe to the collective. It's just $1,000 a year. We send you very, very detailed notes, as well as we send you you know, decks and models about 20 companies a year, 5 companies a quarter. And you can join us. And the beautiful thing about it is that you can also help startups by giving them your time. But $1,000 a year helps us to take care of a lot of the admin involved with making sure you get great companies every year. If you're interested in investing in the rolling fund, we can also drop that link there. Denike, if you you can invest in a rolling fund. We do not charge fees for our rolling fund if you're a member of the collective. Although the collective does require an application process. Just some housekeeping over there. And thank you all very much. If you're a startup, we get a lot of startup pitches, and we're always excited to get cold emails, like Sahil advocates as well. So just feel free to reach out to us through the form on future.africa/collective, and we will be happy to learn more about what you're building.
Thank you for listening to Invest in the Future by Future Africa. To find out more about Future Africa, please visit www.future.africa. To join us as a co-investor in the Future Africa Collective, please visit future.africa/collective. And to apply to the Future Africa Fund, please visit future.africa/fund. Thank you once again for listening.